Hello, everyone, and welcome back to the WMA podcast. My name is Jeff Nugent, and today joining us is Kevin Ward. Kevin is a senior advisor at Moneta Group and has built his career helping individuals and families with long-term financial planning. He earned his bachelor's degree from the University of Illinois and holds a CFP designation. So, welcome, Kevin, and thank you for being on the podcast.
Thanks for having me, Jeff. Looking forward to catching up here.
Yeah, for sure. So, without further ado, Kevin, do you want to tell us a little bit about yourself and your journey into the financial world?
Yeah. So I kind of lucked into the holistic fee only financial planning world. I went to the University of Illinois, and at that time didn't really know what I wanted to do, and just kind of lucked into this agricultural and consumer economics degree that they have. And with that, there's a certification for financial planning. So that was what allowed me to take the most business classes in that program. And by doing so, I actually found what fee only financial planning was and was able to take my capstone class and really meet with some great firms my junior and senior year that really made me lock into, what, this is something I want to do for my career, and am able to do that. And was able to launch that then into finding Moneta in 2015, and I've been there since with a 2 year break. When I moved up to Chicago, I joined a single family office and learned a lot there. And then during COVID, it just became a reality that we can work remotely and we can do things without being in office every single day. So at that point, decided to jump back to my team that I originally joined in 2015 and have been working there since. So it's been a great experience and great opportunity.
Yeah, that's great to hear. And I like how you kind of left for a couple of years, and then COVID came and kind of ended up back with your team. So that's a cool story.
Yeah, and it worked out really well where, I joined as a fully remote employee in November of 2020. And within 2.5, 3 years, they had already started talking about opening a Chicago office. So now we've got an office downtown in the Loop that, there's a little bit less than 10 of us now that we can go in when we want to and kind of have our own space. And so, yeah, I have a combination of working from home in Chicago, working from the office in Chicago, and then I'd make a trip back to St. Louis probably every other month or so to kind of see my team and see some clients when I'm in the office there.
Yeah. That's great to have that flexibility between offices and if you want to work from home or not. So yeah, that's great to
Yeah,
hear.
very much so.
So changing gears a little bit, I know wealth management is, all relationships, all communication, all soft skills. So how would you build trust with different clients?
Yeah, so I think that, each client is going to be different. There's going to be some clients you've got that are really just really trusting in you almost immediately. You're able to kind of show that you're an expert in the field. You're able to just be empathetic and be able to communicate with them of what they need, and really personalize the recommendations, personalize the relationship to them. And I think those are the ones that, it comes naturally, but you're still kind of always working to build that trust and kind of like building that, it becomes a little bit more of a friendship, to be totally honest, after a certain amount of time, where it's not so much of building that trust, it's just maintaining it and
Yeah,
keeping that relationship kind of, you hate to say status quo, but if it's a good relationship, you want to keep it status quo.
yeah,
And I think that though there are some clients and even prospects as well that are just less trusting, and so those are the ones where you really have to make sure that you're one of my kind of skills is I'm able to really get in the weeds if I want to with prospects or clients, and especially about things that they're passionate about or I'm passionate about. So that can be getting in the weeds about certain investment products, or getting in the weeds about private equity for some clients. And for some, it might be getting in the weeds with like what they're personally involved in or personally like interested in. So some are very interested in golf, and so being able to talk to them about golf. And then some are interested in books and history, and you're able to kind of like communicate with them on that level and just earn that trust with them, that then you can spin that very easily into talking about business and talking about financial planning and investments, insurance, and anything like that. And I think that that's just a really powerful way to just get to know that person and be able to communicate with them how they want to be communicated with, and not necessarily just communicating to the masses at all times. I think that's a very important part of what we do, is making sure you're able to personalize that, not just the recommendations you're giving, but also the communication style and the communication delivery as well.
Yeah, yeah, for sure. I love how you said like the personalization between different clients because I mean, obviously they want to talk about their finances, but they also want to talk about, the things they love like golf or, shopping, cars, so that's definitely a great way to help build
Yeah,
build
yeah.
different
And
trust.
and you get some clients and some prospects or whoever that you start to try and talk about it and they're just like, no, we'll talk about that later. Like we have an hour here. Let's be
Yeah.
down in the weeds and everything else like that. So those are usually the clients that are they're more personal and friendly, like on the quick calls rather than like the review meetings or anything like that we're doing where it's like, hey, let's we've only got 45 minutes or an hour here. Let's try and make sure we are staying on task throughout the time period. But then being able to add the personal flair when you can and when you have time is a great way to just build that camaraderie. And it's that's why I'm in the field to be at the end of the day. It's relationship based and it's all about being able to do the right thing and service these clients in the best way possible.
Yeah, yeah, for sure. But yeah, I love hearing that. But yeah, I know I can definitely assume some clients just want to be, strictly business and only talk about the finances. But yeah, if you can add that personal flair, that'll definitely help. Yeah, I
Yeah.
love
And
that.
then there's some clients where, we have a 2.5 hour meeting and we talk about business and stuff for about 10 minutes and the rest of it's all personal catch up and hearing about the kids
Yeah.
and grandkids and everything else like that. So every client's different and, we kind of tailor made our calls, our reviews, our emails, everything is based on the individual client. They're not, we're not doing anything at a mass level, which is really a way to build trust as well. When you're able to do everything individualized for clients, that goes a long way.
Oh yeah. Oh yeah, for sure. For sure. I love that. Going on to the next question, what are some common mistakes that advisors make when communicating with, clients?
Yeah, I think we talked about a little bit of it, in the first segment. I think a lot of it has to do with not really understanding the clients and not really understanding the client questions. So I know this from personal hand. I when I first started as a CSM at Moneta, which is a client service manager, that's kind of the one of the entry level positions we have. So I graduated thinking I knew some things about financial planning, but maybe not a full amount. So I'm able to kind of learn and grow as I experience. And within a couple of years, I started sitting in client meetings, started, typing up more recommendations to clients, everything like that, with the supervision of the partner advisor on the team at that time. And what I went through and what I learned is that you have to be individualized to each client. You can't just be you want to be yourself, but you can't just relay exactly how you want to hear it. You have to relay how they want to hear it. And I think that
Yeah.
that's a mistake that a lot of the younger advisors we see and a lot of the prospective advisors that we see as well is they're not able to really tailor make that conversation, that communication to the clients and prospects. And from that, then they're, when you have one of those conversations with someone who they're asking you a question and you're just not understanding what they're asking, and then you're delivering bad information based on the misunderstanding of the question, that leads to then more miscommunication. It leads to frustration on both parties' ends, and it leads to, in some situations, you have to go back after the fact and kind of fix it, or you have to, potentially lose some of that trust that and the goodwill that you've accumulated over the years, just because of miscommunication a lot of times. And so it's making sure that you're comfortable with asking a follow-up question if you have to, making sure you're comfortable with not looking, like a lot of people are concerned with and hesitate to ask questions because they just have that assumption of, oh, it's a dumb question, or, oh, I'm going to look stupid if I ask that. And at the end of the day, there really are not any dumb or stupid questions. I think that that's just something that as an advisor, we have to be able to ask questions and we have to be able to know that we're asking these questions and we're digging into these more information, like into these details, because
Yeah.
when you're just asking face level questions, the client's going to give you one response, and the more you dig into it, and the more you kind of learn about their goals, what their like vision is with life, it changes the conversation so much, and you're able to really make specific recommendations or make specific like advice to them. And if you didn't ask those questions, you wouldn't know that. Like we've had so many examples of clients who we don't really get in the weeds right away, and then all of a sudden it's like 2 years in the relationship, and you start to just get more comfortable, and you're able to ask more of those questions, and they're more open to trusting you with some of this very sensitive information, and you find out about these different things. I think it, and then from there, you're then able to really customize their goals and their financial plan to what are those specific goals that they may not have even known they had until you dug into these things further.
Yeah, yeah, most definitely. And you kind of touched on the deliverance of like how you say something or, the delivery of when talking to clients. How do you like handle different difficult conversations, with different clients that just have like
Yeah,
unrealistic expectations or just have different expectations?
yeah, I would say that's a large part of that is the communication with individual clients. It's a lot easier when you've been working with someone for 5 or 10 years and able to have a little bit more of a difficult conversation, or able to, bring up things that are not as fun to talk about, spending patterns, investment returns, anything like that that is viewed as a negative. I think you're more hesitant to do it, but if you've built up that goodwill and that trust, then it's a very natural and easy conversation. And we've had a lot of them where it's like, oh, I wouldn't even known that unless you told me about it. And it's like, yeah, that's making sure that you're made whole, making sure that it's not going to alter the relationship. And I think part of that, and what cool conversation with the client around their financial plan, and how really more often than not, beyond deviating off some volatility and getting concerned and trying to time the market or anything like that. Or even on top of that, there are the really difficult conversations around spending, and some sort of don't want to outlive your money. Here's what you need to do. And so a lot of that is, we want to make sure we have the correct data. We want to make sure that we have the correct inputs going and the correct assumptions being made. And when you have that kind of confirmed and you're able to really have that conversation with the client around, right now you're spending this amount, here's the facts behind it, and you kind of have to figure out the right way to deliver it. And every advisor figures out their own tone, and like I mentioned earlier, like every client has how they want to hear things differently. So with some clients, it might be almost like an easy entry, is like making a little bit of a joke of like, this is happening. With other clients, it's a little bit more direct of like, hey, you know what, like this is what we planned originally when you started working with 3 4 years ago. Just as a heads up, this is your spending is $10,000 a month over, or $5,000 a month over, whatever amount it is. And it's, that's, at the end of the day, that's the only part of the financial plan that the client can control. They can't control the investment returns. They can't control what bond markets do and interest rates do over time. All
Yeah,
they can really do is control what their monthly and yearly spending is. And so it's much more of having that conversation around, here's how you can do this for a certain amount of time, but if you're going to do that, then that means you have to make changes at some point in the future. So it's trying to catch it before it becomes a real problem is one of the big things. And if you're able to do that, then you're it's a lot more of a natural conversation to be like, hey, this is fine for right now, but just as a heads up, if this continues, this might be a problem in the future. And
yeah,
and sometimes that, you know, goes the opposite way too. And those are the fun conversations. So there's a lot of clients we have who, they start working with us and it's like, I really want to retire by 65. And that's their hard set goal. And all of a sudden they're 58 and they're like, like, I'm just curious, like what would happen if I retire in 2 years? And we're able to
yeah,
run those projections. We're able to kind of have those conversations. It's like, look, you've busted your butt saving, you busted your butt, working. And because of that, if you spend what you say you're going to spend at 65 when you're 61, you can retire with no problem whatsoever. Like that's not even a concern. Now, in those moments, we're also clarifying, like, this is based on these spending habits, these not necessarily return habits, because we're using Monte Carlo and everything like that, but
yeah,
it's this is not a set in stone like plan. Like we can't just set this and like you just get to spend whatever you want during retirement. Like we're going to make sure that you're sticking to it. We're going to give you a typically for retired clients, we give like a monthly distribution that they kind of treat as like a paycheck replacement. And that way they're living within those means of like what that is on a monthly or yearly basis. And that is one way that, it makes a more smooth transition to retirement. And because that's, at the end of the day, that's what most of our clients are here to meet with us, is for their retirement. And then on top of that, kind of family planning and family goals and everything like that. But we're working with clients and families who that's what they want to do. They want to spend more time with their kids, their grandkids, their golf game, whatever it might be. Like they're gonna work towards that point. And so if we can help them get to that point sooner, or making sure they're staying on that point, don't have to make drastic sacrifice in the future. That's what we're here for.
Yeah, yeah, for sure. And is it easier to, talk about difficult scenarios or, difficult conversations when you've built, that trust with their client, when you guys are almost, when you guys are close? Is it a lot easier to have those conversations or tell them, you guys have to stop spending this much or maybe, chill out a little bit here and there? Like, is that a lot easier when you and the client are pretty close?
Yeah, I mean that's a very big help for sure. Sometimes it can be a little bit more, not maybe a little more awkward. It can be a little bit more kind of because especially when you are really close with the client like that, like they're not expecting you to kind of tell them bad news ever, just because most relationships are typically a lot of good news and celebrating and that kind of stuff.
Yeah,
So I think there's that aspect of it, but I do think that when you've built up that trust with a client, they're listening to you, and so when you are able to give them that heads up of like, hey, in 5 years, if you've continued to spend the current way you have, there might be a problem at that point. That's a much easier conversation than not having trust with someone and either trying to make that comment and then not wanting to hear it because you don't have trust with them and they don't trust what you're saying,
yeah,
and then ignoring it for 3 years, and all of a sudden it's like you're at that point of like you're 2 years away from like being in a very different financial spot than you were 3 years ago. And so that's where sometimes you just have to like be able to push through and like, you know what, you might not like to hear this, but you have to. And I'm saying all this, and these are all kind of like the negative lights of the job, and the tough conversations are the ones that you don't want to have, but those are not few and far between, but they're not as common as the joyful conversations, which is great.
yeah.
And with certain market conditions and everything like that, like sometimes they're more common than not, but that's why we have asset allocation, we have portfolios that are meant to withstand the market volatility and everything like that. That it's a little bit easier of a conversation when it's that way.
No, yeah, 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 most definitely. But yeah, I just like hearing you say just how you build different trust with clients and how different conversations go so far. But I like how most of them are usually pretty joyful. So that's good to hear when going into the industry.
Yeah, exactly. So for it's not all not all doom and gloom by any means. It's there's more good stories than bad stories, and some day it usually seems to come in waves where it's like two or three in a row of like, okay, these are going to be a little bit more difficult conversations, but then that means you have a long run of 10 plus of like, okay, these are good conversations. These are giving a client good news, which is always more fun than not.
Yeah, yeah, most definitely. And then changing gears a little bit, just kind of
Yeah.
going into the future of wealth management because there's been a lot of changes recently. The markets have been changing. So how do you see technology like AI or different robo advisors impacting the industry?
Yeah, so I think that AI is something that obviously has grown in popularity the last 2 plus years now. I think if anybody said AI 3, 4 years ago and you weren't in that sector, I think you probably thought of alternative investments, or you probably thought of, some maybe AI from a movie or something like that that, you wouldn't really think of in the workplace, like especially financial planning or anything like that. So I think, our firm has done a really good job of making sure we're properly vetting all the options out there and making sure that we're not sacrificing client data security for a quick and easy fix. And
Yeah,
that's been the one of the biggest things that I think that a lot of industries are concerned about is like making sure that our data is protected, making sure we're not in an open source platform or accidentally putting in like sensitive client data and something that could potentially leak or be have a breach or anything like that. And so then it's like once you're able to get past that, then it's like, okay, how do I train myself now in AI? And so that's as a team and as a firm, that's what we're kind of working towards of like how do we become more efficient with time as an team, documenting notes that we've taken during meetings or documenting like follow-up tasks and things that are like proactive ways to cut off our time so we can spend more time doing what we love, which is spending time with clients, spending time with giving recommendations and being able to help people really, really achieve their goals. And so that's where there's a big shift, I think, whereas before it was a lot more manual work and more hours spent doing back office tasks and back office type work, either as an advisor, as a CSM, or even as someone on for Moneta, we call it the enterprise service team that is actually going in and doing things that clients aren't directly seeing. But if they don't do it, then the clients just the relationship doesn't happen. The you know um, an alternative investment purchase, like any of those things don't happen and nobody sees that, but that's the hardest part of the job. And so when we can automate something, when we can make something more streamlined, I think that's the future of the business world as a whole. Is we're not assuming that AI is going to take financial advising jobs. I think at the end of the day, I think that's
Yeah.
the biggest thing. It's how can you use AI and utilize it to be more efficient with your time, so you can either go out and meet with clients more frequently, or even go out and prospect more and trying to bring on new clients as well is a big opportunity set. But with all technology, with all everything else like that, if you're not doing the initial making sure it's secure, making sure that it's reliable information, that you're not just like wholeheartedly trusting it. That's one of the things that's how you get kind of bit down the road of like, okay, this by doing this not securely, like you're putting your clients at risk or anything like that. And we see it with even like note taking apps and AI, and we use Copilot primarily, but that can lead to, if you're just solely trusting what's happening in the back end with AI and what AI spits out, like you're you're going to look bad in front of the client. You're not going to be taking accurate information down. You're not going to be doing all these things completely accurately because it's still learning. It's still trying to figure out, what your voice sounds like and how to, do things the way that you want it to be done is a big thing.
Yeah, yeah, most definitely. And I completely agree.
Yeah.
I think AI will definitely help us out a ton, in the financial advising space. I don't think it'll take away our jobs, but I think it'll make our jobs a whole lot easier and just more efficient, be able to talk to more clients, join more meetings. So I think it'll kind of just take away the inefficiencies of the job.
Yeah. Yeah. And I think, I mean, you asked as well about robo advisors, and I think I think they're not completely hand in hand. I think
Yeah,
maybe eventually robo advising will be more AI based and that's where it almost is like, okay, like more hedge fund strategy of like trying to time
yeah,
the market and try and do everything like that. And I think that's where a human and a financial advisor, and especially like a CFP, like I know you have aspirations to achieve. I think that's where we can really jump in and provide that advice. And so the the robo advisor shift really started. I've kind of been paying attention to it, and we've Schwab has gone through some different iterations of it. A number of different robo advising companies have gone through it, and I think that the general marketplace has been this launch. Everyone's kind of skeptical of it, and then everybody kind of went all in on it a little bit, like a little bit less than 10 years ago now. And then since then, it seems like it's almost like dwindling down a little bit. Like I think there's
yeah,
still a place for it with the right situation, with the right, especially up and coming clients and prospects. Like that can make sense for them. But I do think that, especially with COVID hitting, I think that was kind of that realization of like, what, I enjoy having a human being the one hitting the buttons, and I enjoy having the human interaction where it's a true conversation and they're able to build a relationship with me that's not computer based or whatever else. And I think that the drastic market downturn when COVID hit, actually in February and March of 2020, I think that was a little bit of a reset. And then the fact that we were, pretty much all home for a year to 2 years, depending on where you lived, like
yeah,
you're home doing all of that. And I think a lot of people thought that that was going to be the drive to like, okay, it's all going to be online. We're only going to do Zoom meetings. We're only going to do, if you're trying to work with an advisor, like why not just Google the answer, or why not just use an alternative, like an artificial intelligence, model to keep you in the market or whatever else when the market is volatile. And I think coming out of COVID, we realized that, more people are then craving that face-to-face interaction, not just through Zoom. Like they want to meet in person if they can. They
yeah,
want to have that relationship with somebody. And I think that was known and was a kind of a fact for the retiring clients and the clients that are retired. Like I think we knew that they were like begging to get back to meeting face to face and meeting in person again. But the one I've been really surprised by is, clients who are those, we younger clients, so call them 25 to 40, sometimes 50-year olds as well. They're really the generation that grew up with technology. So they're the
yeah,
ones who had computers in school. They had, all of these access points to technology where they're very comfortable with technology and trusting what a computer is telling them. And I think that the vast majority of people thought that they would, prefer to, okay, if I can do a robo advisor, if I can do find financial advising information online by Googling what is this, or asking AI, hey, I just got married. What do I need to do? I think that a lot of people thought that that would be what they wanted to do. That's a cheaper way to do it. It's, right at your hands. You're not waiting for a response. You're not waiting for somebody to answer the phone. With some people, it's you don't have to call somebody. You don't have to talk to someone. I know that's, a concern for some people. And I think that and a number of other people in the industry have been shocked at the fact like those are the people who now, and that generation especially, they seem to be more all in on financial advisors and finding a CFP that's going to be a holistic financial advisor for them than even past generations. I think the
Yeah.
past generations kind of relied on them as like, okay, they're my investment professional. And if they can provide some insight, that's great. Now I think with the CFP, designation and just the world getting more expanded, I think more people are aware of it. And I think more importantly, I think just that generation just, I don't want to say it's a revolt against like the COVID, year or two, but I think
Yeah.
that there are a lot of people who just like that face to face and that personal interaction with someone and building that relationship. I'm meeting with a lot of prospects that are around 30 to 35, 40 years old who are want someone, whoever that might be, and they want to be for a beer. They don't just want to sit there and like send two emails, join a Zoom call for 30 minutes, get some stuff done, and then only interact over text, app based messaging or emails. Like they want to build that relationship. And I think that
Yeah.
that has been a little bit of surprise for me. And I think that it's kind of caught some people by surprise of like, we can't just, treat this generation as if they're only going to want to be online and they're just going to be a virtual client. Like
Yeah.
it's it's still a relationship, and that's what they want more importantly than anything else.
Yeah, yeah, most definitely. I know that's what advisors want. I mean, I want to go into this profession to, build relationships, communicate with different clients, learn more of their story. So I'm glad that it's on the other side as well for the clients, also being interested in,
Yeah,
that face-to-face
yeah,
interaction. So that's great to hear, especially when I'm going to be in the industry in a year or
yeah,
two. So I'm excited. I'm excited for that.
exactly. And that is definitely not a like 100% effective, like you go talk to a 32-year-old or 35-year-old or whoever. Like there's no guarantee that that's the situation, but I think it's more common than not, and I think
Yeah.
it's more common than we expected, that's for sure.
Yeah. Yeah. So
I
that's
think
that's great to hear.
that's one of the big shifts that a lot of people have been talking about, the fact that there's a big wealth transfer happening in the next 10, 20, 30 years. And I think that one, people have just kind of been banking on it, and people are living older and everything like that. And I think people are trying to build their books around that, and that's just not the way that we're doing it.
Yeah.
But I think that it's becoming much more of, in the past it was kind of like we would just work with a client's child or whatever whenever they turn 21 or whenever they turn a certain age. And I think now it's much more of like, more people want to be able to kind of like run out on their own, and they want to be the one to find their own advisor. They want to be the one to build that relationship up and make sure that they're connected with that person, and then it's a fit. Not every client advisor relationship is a fit, whether that's personality or communication style or anything like that. And even sometimes portfolio management, like every advisor is going to treat a portfolio differently. And so it's those type of relationships that you're able to kind of start from the ground up are the really fun ones, because you're able to really see that grow. And that's one of the big things that I'm looking forward to as a younger advisor. And you'll have the same situation where you're able to take on these clients that are similar age as you, and sometimes even younger, sometimes a little bit older, and you're truly able to see their career progression, and they're starting a family, they're getting married, they're eventually trying to retire. Like you're able to see it go full circle. It's a very cool experience when you're able to get to that point, and that's what us young guys have going for us as well. Like I don't think you're retiring in the next 10 years. And
Yeah.
so you're able to really see a long-term horizon with all these clients.
No, yeah, most definitely. I think that's what, younger advisors just kind of have the advantage of. They're going to be able to see, this whole person's financial plan, retirement plan. So I think
Yeah.
that's honestly a privilege to have a younger advisor, being with you the whole way. So I think
Yeah.
that's really great.
Yeah.
And leading into our last question, what trends do you see shaping the future of wealth management? I know we talked a little bit about the wealth transfer that's gonna, happen in the next 10,
Mhm.
20 years, but do you see any, significant trends?
So I think that we've talked about quite a few of them that are out there, and people
Yeah.
talk about quite often. I think one of them that is I'm seeing it more and more come up in the news, and it's becoming a lot more interesting, and um, I'm intrigued by what's going to happen. Is the dollar set that's out there in the private wealth world is quite large, obviously, and the big shift that I'm noticing is that private equity and institutional investors are really taking notice of it. I think that historically they've kind of kept away from that because of regulations, because of not viewing it as lucrative of a position. I think now that's shifting a lot. So, there's a lot of people talking about the democratization of private equity, of alternatives, and making
Yeah.
sure that you're able to get that asset class in everyone's hands. And I think that that's a great opportunity for the right clients. I think that there is a lot of fees added to it. There's a lot of different ways that advisors, that private equity funds, that all of these different entities can make money on people who don't know what they're investing in. And I think that that's just a major concern I've got. And I think that's why, we're always triple vetting everything that
Yeah.
we're advising of our clients. And um, I think that's one of the big ones. I think, the more automation is probably
Yeah.
one of them. So being more efficient with the advisor's time, and the advisor being able to spend more time face to face with clients and not executing trades, or not, doing those types of things. I think that's a big shift, and is able to utilize that time then to launch into the holistic financial planning. So, a lot of what we do, and people come to us because they think of investments and they're like, hey, you know what, my net worth is enough now that I should probably have someone doing this for me. And those are always really fun conversations for me, because it's like, okay, like that's sure we can tackle that, but also we're going to spend the next hour and a half talking about everything that's not investments. And they leave that meeting like, okay, I feel really comfortable, and I trust that person, and I like what they said, but like I didn't go in for that. I went in to talk
Yeah.
about investments. And it's like that's the shifting landscape, I think, is that there's more
Mhm.
holistic advisors out there, there's more CFPs out there, and it's ensuring that all people are able to get great advice on a fee only basis. And there's no potential conflict of interest. I think that's one of the big things of like CFP designation, working for a fee only financial planning firm, is like you have the confidence that your whether that's your team down, your management down, your company down, of like you're not pushing towards bad investments that are not fits for clients, because it's going to make you more money, the firm more money, whatever else. Like doing things that are always in the client's best interest is kind of like the Moneta motto. And I think
Yeah.
that's becoming more and more prevalent. And so that is a major component that is dollar based, but then there's also the fact of like there's still the relationship and management side of that business, and that's becoming, I think, more and more important, because of the fact that you can go online and just Google, or put into OpenAI like, what should I be doing when I have a kid? Like, what estate
Yeah.
planning documents are there? And it's like that's great, and you can run with that, but like you don't know that is 100% accurate for you. Every client's different. Every client's got different needs.
Yeah.
And I think that it's creating that customized, tailored approach to each individual client, and where they're at in life, what they have for goals, and so on and so forth. And so, that's been our approach for quite a while now. And so I think that's one of the trends that we're noticing, is like, okay, how do we keep that edge moving forward? So it's kind of
Yeah.
trying to find those going above and beyond opportunities, going and trying to making sure that you're servicing your clients at the highest level possible, and making sure they always feel comfortable with you, because it's like you said, it's an evolving landscape that's getting more and more
Yeah.
competitive. That
Yeah.
is, it's important to have those differentiators. It's important to have those relationships.
Yeah, yeah, for sure. But yeah, I'm glad you said, you got to customize every client's experience, tailor it to, all their experience because they all want their own financial advisor. So yeah,
Yeah.
yeah, that's great to hear.
Yeah. And I think it's the competitive landscape is great, because I think that, when I was looking for a job 10 years ago, it was starting to really take off, but not to the extent it is now. I mean, now it's
Yeah,
there's so many firms out there that are doing this, and at the end of the day, there's a lot of consolidation happening. So smaller firms getting eaten and acquired by these bigger firms. They're kind of able to scale and scale and scale. And we've been lucky enough that we're one of those that are acquiring firms when it makes sense, and while doing it from still a very independent standpoint. So we have no outside capital or anything like that. And it always, it's from our perspective anyway, we love being able to say like we have no outside private capital. We have, no one's telling us what investments to go into or anything like that. And I think that that's going to be a big driver of like, okay, what do costs look like for clients in the future of like as they're getting bigger and bigger, like is there a differentiator? Are they able to like drastically like offer the same offerings as all these other firms, but at a lower cost because they're servicing so many clients? And then it's like, okay, now you're cutting costs, but are you doing that at the sacrifice of servicing those clients at the same level then? And so I
Yeah.
think that's where the industry is kind of, we're all rising each other up a little bit, I think. And I think it's one of those great opportunities where, if you're an average American or, anyone in the world right now, like you can find a really good financial advisor that's going to act in your best interest and is within your price range.
Yeah.
Some clients and prospects are not at the right price range for me, for you, for other people. Like every firm has got its own model, and that's what's so great about the amount of people that are out there now that are able to give good advice is that you can find a landing home. You can really any client can find a home for whatever needs they have. There's so many
Yeah.
specialties out there, and there's so many other people out there that can help them.
Yeah, yeah, most definitely. And that's because, I mean, the growing industry, I mean, wealth management has been, growing like crazy. Everyone's
Yeah,
trying to get in the industry. Everyone wants to be an advisor. So, yeah, that's great to hear that there's more advisors that, fit everybody's needs.
exactly. Yeah, it's there's a lot of industries that have three letters after their name with initials and abbreviate and designations and everything like that. And I think that CFP is one that's obviously expanding. Some other ones are not doing that as well. And um, that's a great opportunity for someone like your age, where it's like there's so many firms out there now that are wanting CFPs, and you're able to sift the CFP relatively quickly compared to a lot of others that did not go to a wealth management program. So that's a big help, and will be a great selling point for you as you're looking for a full-time job in a couple months.
Yeah, 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 most definitely. So that's all the questions I have today. I really appreciate you coming on the podcast and, helping out our viewers and just saying your insights and also a little bit about yourself and your story.
Yeah, very happy to join. Thank you for having me. It's been a fun time catching up with you as always, and yeah,
Yeah,
we'll talk soon.
yeah, most definitely. Thank you, Kevin.
If you enjoyed the discussion, please like and share the podcast on Apple and Spotify. The Spartan Journal podcast is part of Michigan State University's Wealth Management Association, a student organization whose goal is to inspire the next generation of financial advisors. The Spartan Journal news team releases a newsletter every Monday morning comprised of financial literacy and the week's market updates. Feel free to follow us on social media at MSUWMA and check out our website at msuwma.com. Anything heard on either the MSUWMA or Spartan Journal podcasts is for educational purposes only and should not be considered as investment advice.